All right, welcome back. We're rocking and rolling with our market insiders, Jack Gage, Jim Lacamp, Michael Pinto. Mike Pinto, I think something fair inside me says you deserve a response after Jack Gage pulled you apart. If he's Sigmund Freud,
you already sent me a bill.
You can be the Carl Jung, but only briefly. And
right,
never one to pile on, but I just want to note regarding your inflation call. Metals and mining, let's see. Freeport-McMoran today down 17%.
That's copper.
Gold, Newmont Mining down 9%.
That's copper, industrial metal. What about gold? What about gold? Is gold cheap at $800 an ounce?
Gold down 40% year to date.
Listen, there's a huge battle between the deflationists and inflationists, of which I'm chief among them.
No, I think there's a huge battle between you and the deflationists.
Well, listen,
I don't know many inflationists.
on the deflationist side, there's a tremendous amount of excess reserves building up on the central bank's balance sheet. The deflationists are going to say that money will never be loaned out. Why? Because the consumer is under too much pain and duress from their balance sheet. Yes, they have $14 trillion in household debt, 100% of GDP. Their debt-to-income ratio is at 138%. So the consumer can't borrow. But the inflationists are right. And the reason why they're right is because the Fed and Treasury are expanding their balance sheet greatly.
Yes, but
the Treasury is issuing debt. The Fed is monetizing that debt.
And
it's going around the consumer.
The Fed is tripling its balance
so
sheet.
It also,
but let me, this is for some perspective.
It's a matter of timing, though. It's a matter of timing.
No, it's not necessarily a matter of time.
Forced liquidations going on. Yes, it is. You've got forced liquidations going on around the world. Every asset class that you can name is down. Every asset class you can possibly name is down.
And so you're arguing for deflation?
Yes.
All right. So
and I'm saying the deflation comes first.
I thought it was on my side. I thought you were on my side.
I'm saying the deflation comes first, and then the inflation.
All right, I got you.
Every central banker in the world is going to be wrong.
But it is possible that when and if the crisis passes, the Fed will relieve its balance sheet. They will reduce its balance sheet, and so the Treasury. I mean, the key point, Jack Gage, is we don't like this. There's a lot of buildup among government assets and balance sheets. And I admit it, taxpayer expense. But regarding inflation, let's say 5 years from now or some such thing, we don't know. The Fed may wind up selling they don't have to do the lending facilities when banks get back on their feet. That's a whole new ballgame. And the Fed was overly tight for about 2 years. So let me give you another whack at it before we get back to stocks.
Absolutely. Listen, rates are low. We all know that. We know we're trying to stimulate growth going forward, expand the economy. But you look at things like oil, look at the base metals, and they're falling every day. Again, that 70% record drop. So listen, I think it's right now
the dollar
a very stable environment. The dollar's gained. The pound
historically high, though.
I mean, it's out of control.
The pound is higher than the U.S. dollar.
Hey, Jim Lacamp, now that we've polished off Pinto's inflationism, Jim Lacamp, I just want to come back to your own bearishness because, I don't know, I heard you just loaded up there before the break. You got a nice-looking market here, home builders, retailers, consumers, financials, banks. What is it that's troubling you about this story? Because when you see a day where the stock market goes up, even though the economic statistics went down, that is an awfully healthy market response, is it not?
That in a vacuum by itself absolutely is, but there wasn't any volume today. And if you look at the volume Monday and the internal dynamics of the market, Monday when the market was down 687 points, it was a lot more vicious in terms of supply and demand for stocks than today's rally was buoyant. Secondly, if this is a market bottom, and I hope I'm wrong here, I really do. I hope somebody says to me a month from now, you were an idiot for saying that wasn't a bottom. But if this is a bottom, it doesn't look like any other bottom in the history of the U.S. financial markets. There's been no volume on the buy side. There's been none of these reversals have had any follow through at all. All it argues is that we've got more plodding along. It doesn't mean that we are at low levels.
You're going to stay bearish. You're going to miss a 2,000-point rally, but that's okay. You're an adult. You're entitled to miss it. Let me go to Carl Jung here.
There's a difference between trading sideways and trading up.
Hang on a second. We got to finish this segment off. Carl Jung, Pinto, what is your recommended investment right now?
Free market. First, let me say
your wild-eyed inflation.
First, let me say, and I love your mustard seeds, and I love you, but oil and gold will lead the market out of its malaise. And I will say emphatically that free market capitalism cannot be bailed out by socialism.
I appreciate that. Just give me an investment here. One investment.
One investment, agricultural commodities.
All right. So you're sticking to Jack Gage. What do you like here?
I like some of the financial services companies. I think Goldman Sachs, Morgan Stanley, last one standing. I think they're going to be a safe bet going forward as they recover and morph into more profitable.
Did you see this story, by the way? Lloyd Blankfein and John Mack. Blankfein, the head of Goldman Sachs, John Mack, the head of Morgan Stanley, have been having dinner together.
Right.
According to Charlie Gasparino, if I have this right, John Mack has been buying this dinner, or he bought the last dinner. Is there a merger there, in your opinion?
Oh, gosh, who knows? You know, that's two very different cultures trying to get together, but it is somewhat watching from afar, like seeing General Patton and Douglas MacArthur sit down in the same mess hall.
Ooh,
so it's
love
intriguing from a romantic standpoint. I don't think a merger happens.
Will Goldman Sachs and Morgan Stanley survive? Real quick.
I do. I think so. I think
Will they
they'll
go
be vastly
private? Will
different.
Goldman Sachs go private?
Goldman Sachs has to be thinking about it. They really do.
We're going to go out of here. Jack Gage, Jim Lacamp, Michael Pinto, Sigmund Freud, Carl Jung. I'm Larry Kudlow.